Ever wondered which luxury watches will soar in value next year? The watch market is a complex, dynamic beast where timing, rarity, and brand prestige intersect. In 2026, some brands will continue to dominate the investment space, while others may face headwinds. Today, we're going to be diving deep into standout brands, analyzing their current status, historical price movements, and future outlook. If you're serious about watch collecting or investing, stick around. You won't want to miss this. Let's start with Tudor. Known as Rolex's more accessible sibling brand, Tudor has steadily gained respect among collectors by offering vintage-inspired designs with reliable modern movements at competitive prices. The Black Bay collection stands out as the brand's flagship line, boasting a cult-like following and strong secondary market performance. As of 2025, secondary market prices for in-production Tudor models average approximately 38% below retail, with variations across collections. The Pelagos tends to hold its value better than most Black Bay variants, while the Black Bay Chrono currently performs best, trading at just about 14% below retail on average. Black Bay models, including the GMT, FXD, and 58, consistently deliver annual returns between 6 and 15% on the used market, reflecting steady demand and appreciation. Looking forward, core Tudor models are expected to experience moderate depreciation, continuing the trend seen in 2025. However, limited editions, discontinued references, and special variants such as the Black Bay Chrono, Pelagos FXD, and Navy Blue editions are forecasted to appreciate in value. Market analysts suggest that Tudor watches could achieve 7 to 12% price growth in 2026, particularly driven by increasing global demand and supply constraints. Tudor represents a solid mid-tier investment opportunity for collectors seeking growth potential without that high entry cost of top-tier luxury brands. The Black Bay line, including GMT and Chrono models, is a strong buy, with consistent annual returns historically between 5 and 8% and potential for continued growth. Pelagos and other entry-level tool watches are more affordable and hold value well, but they generally offer lower price appreciation compared to Black Bay limited editions. Now let's move on to Patek Philippe. Patek Philippe remains the undisputed leader in luxury watch investment due to its limited production, exceptional craftsmanship, and cult collector following. As of June 2025, data from Watch Chart shows that prices for the brand's flagship sports models, the Nautilus and the Aquanaut, continue to demonstrate steady value retention. Nautilus and Aquanaut prices increased by approximately 0.6% in that month alone, reflecting ongoing high demand despite broader market fluctuations. Historically, certain Nautilus references have appreciated over 20% annually in recent years, establishing them as some of the strongest performers in the luxury watch market. The Aquanaut, though more accessible, is gaining popularity and exhibits consistent, though somewhat more moderate, growth. Looking ahead to 2026, industry experts and market data project annual price growth of approximately 3 to 5% across the Patek Philippe lineup. However, limited editions, discontinued models, and complicated references, particularly those within the grand complications category, are expected to outperform average gains, with predicted appreciation rates ranging between 15 and 25%. Nautilus models, especially those in rare materials or with unique dials, are forecasted to see the most significant price surges, potentially increasing 15 to 25% in value. The Aquanaut, while maintaining strong demand, is projected to grow at a slightly slower pace of around 10 to 15%. For investors seeking a reliable blue-chip timepiece, Patek Philippe is a definitive yes. Securing a Nautilus or Aquanaut at retail prices remains challenging, but it is strongly advised to do so due to the consistently rising secondary market values. Entry-level complications and standard Calatrava models offer long-term value preservation, but generally exhibit slower appreciation, making them less attractive for short-term investment gains. Now moving on to Tissot. Tissot remains one of the most accessible and widely recognized Swiss watch brands, selling approximately 2.55 million units in 2024. Although overall revenue experienced a slight decline, Tissot continues to maintain strong visibility within the entry luxury market, appealing to first-time luxury buyers and collectors on a budget. In 2025, Tissot's PRX quartz models delivered modest returns on investment, with resale value growing by about 3 to 5% annually. The Powermatic 80 versions, automatic models equipped with the well-regarded 80-hour power reserve movement, show slightly stronger performance, appreciating between 5 and 10% per year. More sought-after models like the PRX chronograph and gold bezel variants are outperforming their peers, with annual returns reaching between 10 and 15% in the secondary market, signaling growing collector interest. Looking ahead, Tissot's reputation as a reliable Swiss brand with an affordable luxury positioning is expected to solidify. The brand's limited editions, especially within the PRX collection, and vintage homage watches are anticipated to see the best growth potential, with steady price appreciation forecasted in the 5 to 15% range, depending on rarity and desirability. Analysts emphasize that Tissot's strong foothold in the accessible Swiss segment makes it a low-risk investment for new collectors and those seeking moderate gains under $2,000. For investors seeking value and liquidity with minimal risk, Tissot's PRX line is a compelling choice, particularly the Powermatic 80 automatics and the chronograph editions. The C-Star collection also holds promise for appreciation due to its sportier appeal and competitive pricing. Now, moving on to Audemars Piguet. Audemars Piguet continues to hold a prestigious position in the luxury watch market, driven almost entirely by the legendary Royal Oak collection. Despite a slight sales volume dip of 0.3% reported in June of 2025, AP's appeal among blue-chip collectors remains robust, thanks to its smaller production compared to peers like Patek Philippe. This scarcity reinforces the brand's exclusivity and drives secondary market demand. Royal Oak models, particularly the iconic jumbo extra thin and offshore chronographs, have demonstrated consistent appreciation. On average, Royal Oak prices have risen about 10% annually over recent years. Limited editions released by AP frequently command premiums well above retail, underscoring collector enthusiasm for rare pieces. Looking ahead to 2026, Audemars Piguet is expected to maintain steady demand with flat to modest price growth, roughly in the 12 to 18% range for key Royal Oak models. The Royal Oak Jumbo Extra Thin is the most secure and rewarding investment in Audemars Piguet's lineup. Its heritage as the original Géraldgenta design, combined with limited production and enduring collector demand, makes it a consistent performer. In contrast, Royal Oak offshore chronographs offer decent liquidity and market interest, particularly in popular variants, but their values fluctuate more due to frequent releases and changing trends. Non-iconic or mass-produced AP models lack scarcity and collector appeal, making them poor choices for long-term investment. Prioritize rarity, design significance, and historical value for the best returns. Now, moving on to FP Journe. FP Journe has rapidly cemented its place as one of the most coveted independent haute horlogerie brands. Sales have more than doubled in just 2 years, rising from approximately 900 units in 2022 to about 1,800 units in 2024. This surge reflects growing collector interest and the brand's increasing prominence in the luxury watch space. A prime example of its market strength is the Chronomètre Bleu, which has appreciated at a compound annual growth rate of around 8% over the last decade. This model now trades at roughly €40,000, effectively doubling its 2013 value. Such performance underscores FP Journe's ability to create cult classics that command serious premiums in the secondary market. FP Journe is poised for continued growth, particularly for cult favorites like the Chronomètre Bleu and the Élégante. These models have shown strong appreciation and are increasingly scarce on the secondary market, driving up prices. The brand's limited production, mechanical innovation, and dedicated collector base make it a compelling long-term investment. While liquidity is low, making quick resale difficult, the consistent demand supports steady value increases. For investors with patience and a high risk tolerance, FP Journe offers substantial upside, especially as demand continues to exceed supply in this niche but prestigious segment. Now, moving on to Richard Mille. Richard Mille continues to dominate the ultra-luxury watch segment, with sales growing approximately 10% year over year, reaching around 5,700 units in 2024. The brand's identity, built on cutting-edge materials, bold designs, and limited production, caters almost exclusively to an elite billionaire clientele. With many of its models priced well above $1 million, Richard Mille has cemented its reputation as a symbol of prestige, exclusivity, and mechanical innovation. Its high-profile collaborations with athletes, artists, and celebrities only strengthen its appeal, driving media attention and demand in parallel. Despite volatile economic conditions, Richard Mille's ultra-high-end niche remains remarkably stable. The customer base, consisting of ultra-wealthy individuals, tends to be less sensitive to macroeconomic shifts, which has helped sustain demand and pricing. On the secondary market, limited editions and models tied to famous individuals or global events often command substantial premiums. These watches typically don't flood the resale market, adding to their scarcity-driven value. Looking ahead to 2026, price growth for Richard Mille watches are expected to continue moderately, with top-tier models potentially appreciating by 8 to 12% annually. Models featuring standout technical innovation or linked to iconic moments or figures will likely see the strongest gains. For investors, the best opportunities lie in limited editions, high complication pieces, and references associated with celebrities or major partnerships. While the risk factor is moderate, mainly due to the very high buy-in and a relatively illiquid market, the reward potential remains solid. The persistent demand among ultra-high net worth collectors supports a trajectory of steady appreciation, making Richard Mille a viable option for long-term investment within the uppermost tier of horology. Now moving on to Panerai. Panerai's distinctive, oversized Italian design has earned it a loyal following, but its market performance presents a mixed picture. As of 2025, secondary market prices for Panerai watches have declined, with the Watch Chart's market index down approximately 8.6% year over year, and a 5-year decline of about 21.2%. This downturn is largely driven by overproduction and brand fatigue, causing many modern Panerai models to depreciate or remain stable rather than appreciate. Collector feedback reflects this trend, noting that many pre-owned Panerai watches currently traded around 50 to 60% below retail prices, making it more advantageous to buy pre-owned if interested in modern models. However, exceptions exist within the vintage and limited edition segments. Early ultra-limited models, such as the Lumino Marina Prevendome 5218-201A, of which only around 120 pieces were made in 1993, have seen remarkable growth, with prices soaring from roughly €15,000 to about €40,000, reflecting a compound annual growth rate near 8%. Collectible vintage Panerais overall have experienced price increases of up to 15% per year, supported by their rarity and historical significance. Looking ahead to 2026, the forecast suggests continued stagnation or slight depreciation for standard modern Panerai models. Meanwhile, the limited editions and vintage-inspired releases are expected to appreciate between 8 and 12%, driven by collector interest and scarcity. Given these dynamics, investment in Panerai should be approached with caution. For those seeking appreciation, the recommendation is to focus exclusively on rare vintage pieces or ultra-limited editions, which have demonstrated consistent growth and strong market demand. Modern base models, on the other hand, are unlikely to gain value and are best avoided if investment returns are the primary goal. In short, while Panerai offers striking designs and a passionate fan base, its investment potential is largely confined to select vintage and limited edition models rather than its broader modern production. Now, moving on to Jaeger-LeCoultre. Often hailed as the watchmaker's watchmaker, Jaeger-LeCoultre maintains a respected position with its blend of classic design and technical mastery. The brand's Watch Charts index shows a decline of about 10.9% over the past year, but retains a healthy 5.6% gain over 5 years. Meanwhile, Chrono 24 data highlights a 23.7% overall price growth in 5 years, albeit slower than giants like Rolex or Patek Philippe. Top performers include the Reverso Duo Face Reference 270-854, which gained approximately 68.5% over 5 years, currently valued at around $8,500. The Master Ultra-Thin Moon Q136-8480 has shown steady appreciation near 7.5%, while the Polaris Perpetual Calendar has gained about 5%, trading near $29,000 against a retail price of approximately $37,700. Core models like the Reverso Tribute and the Master Ultra-Thin Moon typically yield annual returns between 4 and 8%, while more niche or vintage pieces see slightly higher gains of 8 to 10%. Looking ahead to 2026, moderate overall growth is expected, driven by a flight to quality trend that favors classic Reverso models. Boutique editions, along with enamel and skeleton dial variations, are forecasted to appreciate between 7 to 10% annually, supported by increased collector interest and JLC's strategic focus on limited and special editions. For investors, the recommendation is clear. Limited editions and iconic lines such as the Reverso and the Master Ultra-Thin Moon offer the best potential for value appreciation. General models may provide moderate returns, but they lack the upside of rarer, more distinctive pieces. So in summary, Jaeger-LeCoultre remains a solid mid-tier investment choice, combining heritage, craftsmanship, and stable market growth potential, especially within its more exclusive offerings. Now, moving on to Breguet. Breguet maintains a prestigious reputation for its classical watchmaking heritage, with tradition models showing a modest gain of about 2% as of June 2025. While highly respected in the luxury watch world, Breguet's market performance has generally lagged behind peer brands such as Patek Philippe or Audemars Piguet. The brand's value is deeply rooted in its historical designs and intricate complications, rather than in current market trends or flashy innovations. Looking ahead to 2026, Breguet is expected to deliver steady but modest appreciation, primarily driven by its classical complication models like the Tradition and the Classique lines. These watches appeal to collectors who prioritize craftsmanship and heritage over speculative hype. Price increases are likely to be conservative, in the range of 2 to 5% annually, reflecting its niche status within the luxury segment. Investment-wise, Breguet is a conditional buy. It's best suited for those seeking stability through timeless pieces rather than rapid capital gains. Prospective investors should focus on limited edition complications or historically significant references that may hold their value better over time. Standard models and trend-driven designs may see little to no appreciation. So, Breguet offers a sound, lower-risk option for investors with a long-term horizon who value traditional watchmaking artistry, but it also lacks the explosive growth potential of more trend-driven or highly hyped luxury brands. Now, moving on to Girard-Perregaux. Girard-Perregaux remains one of the more overlooked names in luxury watchmaking, despite its storied heritage and technical achievements. As of 2025, the brand is still considered undervalued by many collectors and analysts. Vintage GP models, especially those with Islamic calendar complications or unique dials, have started to gain recognition in niche collector circles, but they haven't yet seen the explosive price growth observed in brands like Patek, or even the independent houses like FP Journe. The brand has been gradually repositioning, focusing on reviving classic models such as the Laredo, their answer to the luxury sports watch boom. However, despite its integrated bracelet design and its strong horological roots, the Laredo has not yet reached the price momentum of competitors like the Royal Oak or the Nautilus. On the secondary market, most modern GP pieces still sell at a significant discount to retail, often 30 to 50% lower, reflecting soft demand. Looking ahead to 2026, there's potential upside, but only if the brand continues investing in limited edition runs, heritage-focused reissues, or strategic collaborations that raise its profile. Without this kind of strong collector engagement or celebrity association, GP may continue to lag behind market leaders. Vintage pieces might see modest gains of 5 to 7% per year, but modern production remains a soft spot for returns. At this point, Girard-Perregaux is a hold or wait at best. If you're looking for high ROI investments, it's advisable to watch the brand's trajectory closely over the next 12 to 18 months. Until there's a clearer uptick in demand or a surge in vintage interest, it's best to allocate funds towards more actively appreciating brands. GP's time may come, but it isn't now. And finally, one more, MB&F. Maximilian Buser and Friends sits at the cutting edge of independent horology, renowned for its radically unconventional designs and high mechanical complexity. As of 2025, it is among the 11 most expensive watch brands globally, a distinction fueled by ultra-limited production runs, typically under 300 pieces per year, and meticulous craftsmanship. Models like the LM Sequential Evo and the Horological Machine series are not just watches, but kinetic sculptures, often commanding six-figure prices. The LM Sequential Evo, in particular, has earned praise for its dual chronograph mechanism and futuristic aesthetic. Its resale value has increased steadily, with watch charts data and auction results indicating an average annual appreciation of 7 to 10%, depending on the reference and condition. Now, because MB&F watches are produced in such small numbers, and they're often sold directly to collectors, the secondary market is thin but strong. When pieces do resurface, they often attract significant premiums, especially discontinued HMs and limited LM series. Looking ahead to 2026, the outlook remains highly favorable. MB&F's dedication to artisanal watchmaking, along with its growing cult following, positions the brand for continued growth. Collaborations with other independent names like Lepe and Kari Voutilainen only enhance its credibility. The brand is likely to maintain annual value increases in the range of 5 to 10%, with rarer references possibly exceeding that. For those with the capital and the taste for horological artistry, MB&F represents a compelling buy. These aren't mass-market investments. They're passion-driven, high-risk, high-reward pieces ideal for seasoned collectors. Focus on LM models with functional complications, or early HMs with limited production numbers. Avoid newer releases unless you're buying direct from the brand, as margins tighten quickly on the contemporary models. In summary, MB&F remains a niche but lucrative investment for those who understand the artistic and mechanical value behind the brand. The luxury watch market in 2026 promises exciting opportunities beyond the usual suspects. By understanding each brand's unique position and market trends, you can make informed decisions to grow your collection and your portfolio. Keep an eye on limited editions, vintage reissues, and rising brands. Now, if you enjoyed this deep dive, do us a favor. Please like, subscribe, and share your predictions down below. Which watch do you think will be the sleeper hit of 2026? Let's discuss.